Today, I'll be openly sharing with you what stocks I've bought for first quarter 2024. In addition, I'll also be showing you what I've bought for portfolios who are on a slow and steady approach. I'll invite you to leave your questions and comments in the sections below. But before that, quick reminder, be constructive, because I guess there will always be naysayers who say Singapore stocks cannot make it. Or why do you buy Bitcoin? You have done 10 times better than what you've done so far. By the way, I still have my Ethereum coins in my cold wallet. I still hold them because my approach was for next generation, so I've sold nothing from it. And right now, quite obviously, they've appreciated. So with that clear, let's get back to the sharing of what I've bought, and we'll roll in the intro video. Hi guys, welcome back. This is my complete list of purchases into my SRS and CDP account for first quarter 2024. And quite obviously, I'm a net buyer for first quarter 2024, correct? But you see somewhere in the middle, I've covered away something I've sold off, and I'll actually review to you right to the very end, so stay tuned for it. So without further ado, let's start with the first name at the very bottom, Genting Singapore. I've owned Genting since last year, and it's been my recovery play on tourism in Singapore. In my opinion, besides MBS, Genting owns the next best premier hotel for tourists to stay in. So as we have heard, Chinese tourists will now get an easier visa, and hopefully more will come to Singapore, which is good news for Genting. And not just that, Universal Studios will be also completing its upgrade very soon. I've actually bought more of Genting on 2nd of January 2024 at $1. Price actually came down a bit, as you can see, to around 97.5 cents on 25th January. I've actually bought more instead of selling, and when news that Chinese tourists will see an easier visa came out, Genting share price actually rallied to $1.05. I didn't sell anything at that point of time because, in my opinion, the recovery play for tourism is far from over. I firmly believe that you can't get rich trading in and out. You need to find ways to build multi-baggers or compound dividends. That's why I've held on to Genting. But what do we know? Mr. Market is very humbling, correct? And in an unexpected twist, the latest result for Genting, while profitable, was actually below market expectations. Genting sold out by almost 10%, as you can see in the chart. Then your next question might be, hey Josh, if Genting is so good and it crashed, why didn't you average down? Why didn't you buy more? To that question, I've actually some experience to share with you. When a company's share price actually sells down due to profit levels not meeting expectations, there's actually no need to rush to buy. What do you expect? The share price to bounce next day or next week? It's actually not going to be. Results being poor will have a near-term overhang that could last for weeks or months even. This right now applies to Tesla and applies also to Apple. I used to, in previous years, average down very quickly and brag, hey, it's a bargain right now, only to see Mr. Market continue to punish the share price for the year ahead. As an investor, I think it's very important to understand that sometimes we overestimate the rosy outlook, or we are late to recognize certain changes on the ground. Hence, I'll usually recommend now to give it more time for more information to surface, whether this bad quarterly result is just a one-off. Hopefully there's some reversal in business trend in the coming quarter or coming half year ahead, and focus on that instead of trying to average down your purchasing price. And to add to that, do also understand this concept. Your money can always buy something that is also good value that hasn't missed market expectations. Focus on that instead of chasing down an average price when you have a losing position. This is something I'll share more along the way, so do again, smash the subscribe button and stay tuned for more quality financial content. I'll actually switch gears at this moment to show you what I've bought for portfolios that are managed for private clients. What you can see over here is for a 100,000 investment portfolio, I've allocated big into equities. There's energy allocations, there's emerging markets and India. A stock portfolio is good for building up dividend income stream, but a funds portfolio is good for building up big amounts through a diversified approach and to draw down for retirement easily because we can always sell down in terms of percentages. If you like to have a properly managed portfolio and also work towards your own retirement plans, Look for my links below. Common questions that I've solved include what to prioritize, for example, for mortgage or home upgrade. Or for example, you have some loans with banks, you're not sure what to do in terms of unbundling certain leverage. These are cases I've experienced working with private clients. So again, look for my links below for full fee-based retirement planning consult. Let's go back to a list of stocks that I've purchased for first quarter 2024. Up next, you'll see is Fraser Centrepoint Trust. Now, Fraser Centrepoint Trust is a REIT that I've covered a lot recently and somebody I've personally purchased quite a bit in the last few months. I've made my purchases at $2.22 and $2.26 in January. At this point of filming now, it's slightly below water, but these two purchases have gotten in the advanced dividend of 4.25 cents that has been paid in April 2024. Now, if you're a fellow shareholder of Fraser Centrepoint Trust, or if you're thinking of buying more into Fraser Centrepoint Trust, do note they pay dividends on a half-yearly basis, and this particular payout is actually an advanced distribution. I'm not 100% sure of the reason. My best guess is they issued more units at that point of time and wanted to simplify the process. That means also there's a balance 1.75 to 2 cents for first half of the year. This is also mentioned that income will be from the period of 5th February to 31st March, and thereafter half-yearly distributions will continue to resume. For me personally, when these dividends payout don't really matter, I've continued to buy at the start of March, I've continued to buy at the end of March with my own new income. So what I preach for you, I also do for myself. Save and invest a good portion of your income and do it regularly. Then what I've purchased further is quite obviously two of my favorite REITs also. The first one being Escort Trust, which right now yields more than 6%. It's also another tourism recovery play on my part. And the other one is Mapletree Industrial Trust. Mapletree Industrial Trust invests in data centers. I'll leave links above on tutorials on it. And right now, Mapletree Industrial Trust with these purchases is actually my biggest allocation in my portfolio. For Escort and Mapletree Industrial Trust, I've not much new information to add, so I'll rather focus on learning points that we've covered so far today. The first is that when a stock you own misses in terms of its quarterly or half-yearly results and sells down, do not panic, but also do not rush to average down quickly. It's just too bad, and maybe it's going to be a long climb back upwards, so be super patient. The second is a reminder to save up well and buy stocks that you like regularly. Don't chase the next shiny item, but instead buy things you like and already own. Or on the other hand, invest into a portfolio regularly with a dollar cost averaging system. Focus on the long term and you'll get to retirement much better. Now, since you stuck with me right at the very end, let me now review to you what I've actually sold off. It's none other than Keppel DC REIT. Personally, I'm not too pleased with what I've read from Guangzhou Data Centers, and me selling right now is not investment advice. It's just how I feel and how I voted with my own money as an investor. I've also lost some money on outcomes which I can't control, and hopefully you appreciate the open sharing, and as always, smash the like button if you haven't done so already. The irony about this Keppel DC REIT purchase is I've actually used this money from my Suntec REIT sale, and I've avoided a 15% decline in Suntec REIT, only to be hit with a 15% decline in Keppel DC REIT. You know, sometimes Mr. Market has two punches instead of one. So the main thing again is always to be able to survive and believe that your winners would far outweigh your losses. If you're keen to hear more on Keppel DC REIT, check out this previous tutorial I have. Or if you've seen it before already, check out this previous tutorial where I've shared how I've actually derived more than 20,000 in terms of dividend income. Hopefully either of these two tutorials can help you in your journey, and I'll see you there. Take care as always. Goodbye.